Manik Taneja joins in. He tracks the IT space very, very carefully at Axis Capital, and there's so much to discuss. Manik, thank you for being with us this Friday morning. So, there's an overall AI debate that's raging around the world, whether this is a bubble bursting or not. But before we get to that, I mean, let's talk about what TCS has done. They're really showing their commitment, right? And now they've got a big partner in the form of TPG. How do you view this 18,000 crore rupee investment that was announced in data centers yesterday?
No, I think this basically just marks progress on the initiative that was called out with the prior quarter's numbers in terms of TCS looking to bring in an external partner either in the form of equity and debt, and thereby this announcement essentially does confirm progress on that front. And I would say this is a long gestation project from on TCS's behalf, and otherwise, does it have any immediate bearing on the stock? I would say presumably.
Not immediate, but if we talk strategic direction, I mean, does it move the needle at all? Because one thing that Indian IT services companies have been called out for is lack of innovation, lack of really stepping up R&D in the next, cutting edge areas of tomorrow. So I'm not saying 1-2 quarters, it obviously doesn't change anything. But if these investments continue and if they start committing more, if the company starts committing more capital towards either data centers or anything else on the AI front, I mean, how should it be viewed?
Certainly a move in the right direction. The only thing that I would say is that TCS has been very categorical in terms of saying that they will limit the capital commitments from the cash flows of the services business in any of these initiatives. And even if you have to do some rough maths, the kind of cash flow that TCS generates and the commitment that they have with regards to return to shareholders, they will still have some balance cash flow to commit to these initiatives. And this is something that will play out over a 5 to 7 year period. The bulk of the value for TCS still comes in from the services business, and thereby I would just say that this is just a progress in the right direction, but does not move the needle in the near term.
Manik, correct me if I'm wrong, but I think your large cap preference is more with Infosys and Wipro.
Yes.
Over TCS. Explain why?
So that's been the call for a fairly long amount of time. The reason for not preferring TCS has been both some of the portfolio aspects and the internal changes at the company, because of which TCS has been struggling on relative revenue growth compared to peers. We've seen them lose out in certain vendor consolidation exercises compared to competition. And I would say that will keep their growth performance in check compared to competition, even for the foreseeable future. So that's been the reason for not preferring TCS to other tier one companies over the course of last, I would now say, 24 to 36 months.
All right. Hi, Manik. Good morning. Good to see you. And what about Mphasis? It's going to go the Coforge way. You know, the large P in there has gradually started selling. Everyone feared, right, when that happened in Coforge. And all of it got lapped up at half the price, at 1/3 of the price, and the stock just continued as growth continue. Do you believe this is an overhang, or do you think that, things will progress in the similar direction and prospects will come?
So Nigel, the difference between a Coforge and Mphasis, at least when the PE was selling, was that Coforge continued with their growth momentum. In case of Mphasis, they've struggled through a majority part of the last 36 months. A combination of high exposure to BFS, high concentration of top 10 clients, some headwinds from the cyclicity of the mortgage business exposure, all of which, in my view, are turning around. And just like some of these portfolio issues were a drag on growth through the course of last 3 years, they might probably be they might end up being tailwinds on growth on a go-forward basis. And that's the reason why we had upgraded Mphasis to our top pick in March of this year and still retain that. So I would presume that as long as the business performance continues to chug along well, investors will lap up the liquidity that comes in from PE sale.
Manik, no, absolutely. I'm going to sort of segue out maybe just a little bit. This is the persistent management on CNBC network. Addressing, of course, the big question of our times right now, right? I mean, which is AI. I mean, the question here in India is what AI will do to Indian IT services companies. The question in the US, of course, is whether it's gone too far, at least in terms of valuations and the big explosion of interest in that space. So here's the persistent management.
Bubble that we all are talking about is about the valuations. I don't think it is about the AI part being real. I definitely think the AI momentum is real. We are in a very early innings of this whole, percolation of AI into enterprises, into the way we do business, and so on. When we look at our customers, they have all been doing proof of concept. Some of them are going big. So this is going to be a multi-quarter, multi-year journey. So it's not about the market, the addressable market not being there. Now, as far as the valuations are concerned, markets are the best judge. Whether the NVIDIA valuation or other valuations are the right valuations at this point in time or not, we'll let that be the market, place. Now, as far as AI and the entire reskilling is concerned, obviously, the way generative AI and AI at large work, and they are getting infused into every part of business that we do, whether we are a tech services firm, whether you are an enterprise in healthcare, in financial services, and so on. So the amount of reskilling, the workforce transformation, that is real.
Yeah, it's real. Sometimes, of course, with markets, as they say, right? I mean, what is worth doing is worth overdoing, and markets have their own do their own thing. But that's the persistent CEO earlier. Manik, we'll leave it there. Thank you very much for joining us. Thank you very much for sort of being here on CNBC TV 18 this morning.